Hello and welcome to a new presentation called July FOMC and Non-Farm Payrolls. It's quite clear that this is about the week ahead that is also stuffed full of important earnings. You already know how the balance has shifted and that the daily analysis covers so much extra premium value for clients, and the same goes for premium Telegram channels serving their intraday and swing trading needs alike. For details on my join page and head off to Patreon for making your selection. A most brief presentation of what's new. I'm launching Signals Preview that is about stock market analysis once a week right into your mailbox, coming with one-to-one dedicated individual support, chart requests or whatever you need to tell me, ask me, whatever comments you need. This serves as a preview of comprehensive daily writings and intraday channel. It's instead of a trial, does not include real assets, and in the following slide I will give you an preview of what it had been like the prior week and what's ahead for the next week. So it is a snapshot of what would await you, briefly narrated, so it is quite incomplete, but to give you a taster. This is a taster only. What would be in the week ahead? If you had been making this choice, what would be coming into your mailbox? So, you know already that the prior Sunday I made, based on the Friday's OPEX session, how it was shaping up and across the sectors in Russell 2000 and so on, quite a few predictions about the roadmap for the week ahead. And this is part of what you would be seeing, because it was not about the CrowdStrike and Microsoft glitch that hit the globe on Friday. It was about more significant issues and rotation out of Nasdaq. I predicted that only Thursday and Friday would be days when indices would try to turn higher and would turn higher, because the market breadth to start the week had been still poor, and we also had quite a few significant earnings ahead, hitting early in the week. It was not just Tesla, it was Google, and Google was more significant in the way of how they would utilize or how they can utilize the AI investments to drive their earnings. You heard me and read me talking much about too high AI expectations when it comes to pricing these in, about the consumer being squeezed. You heard me talking about CPI and PPI signals. You know about the PMIs, how they had been mirroring the stark deceleration in the economy, see the services one especially, and what it means for profit margins, what it means for the rotations, why all of a sudden Russell 2000 started to outperform, whether it would continue, and so on and so on. I had been covering these questions based on earnings, based on market breadth, based on charts, based on fundamentals, based on macro developments, based on bond auctions, and you name it, for premium clients within the daily analysis. And now we are at yesterday's situation, meaning following the Friday's close, and we see a fledgling risk on turn indeed, and it's quite obvious sectorally. Two most important macro events this week are FOMC Wednesday, I don't expect any cut, but we are having already 3 cuts expectations fully priced in. Quite a lot of speculation, and it would intensify whether September would be 25 or 50 basis points cut. Friday we have non-farm payrolls. What would it do with headlines? With the headline figure, what it would do with revisions of prior numbers, what would be the role of government hiring, how does it correspond to bond market close that we had seen on Friday, is it strength, what can we deduce from it, are rates pushing lower, would this push continue and break the prior lows? Based on the disinflation in place, as markets were quite satisfied with core PCE Friday, we see real rates increasingly biting, and that's taking its toll on not just consumer discretionaries but also on commodities and precious metals. All these things have been called premium for clients ahead of the fact. The questions that remain to be seen is how well will be Russell 2000 faring versus S&P 500 in the beginning part of the week. Hasn't the pendulum swung too much in the direction of small caps versus Nasdaq? Can we see some kind of a counter trend move? Or where would you be hiding in this environment? In high beta or low beta names? If you were part of this newly launched preview to these signals, you would be familiar as well with the weekly roadmap and what I think about the upcoming earnings that are ahead of us the following week. We see, in my view, first the S&P 500 rally continuing first. I once again highlight, please note that it's being quite intensely sold before the close. And what does it mean about institutional positioning? FOMC, will it be a dovish experience or markets are going to be disappointed? And the slowdown in the job market, more Fed dual mandate to the rescue. And now, very briefly, those 2 lines regarding upcoming earnings. AMD, I'm not in favor of this reacting bullishly. Starbucks likewise will be probably beaten down. Meta, if you look at the Google example, it can go both ways, but I'm in favor of somewhat slight downside. And Amazon, the $200 wall is still well in place, and given the weakening consumer, when you have prices rising, inability of companies to pass on the rising PPI costs, as reflected in CPI that actually went negative on a month-on-month basis. What does it tell you about the outperformance potential of Amazon following its earnings? Will it guide higher, really? On the other hand, Apple, I'll look for it to be reasonably well received. Expect no fireworks, but I'm not expecting a sell-off disappointment either. And as for the remaining 2 tech plays, I think they would be among the better performers. So let's see whether these can usher in part of the counter-trend Nasdaq pendulum swinging a bit towards the tech side, at least temporarily, in the course of the week. So, just a brief summary. Forget not about the daily analysis going into your mailbox and real-time follow-ups on Telegram and Twitter. You already know my trading story and everything associated as well, obligatory disclaimer, and finally wishes of a pleasant rest of the weekend.